Hey coin traders, what's going on? Thanks for joining us on a big pullback bearish day. But if you have been following the channel for a while, we know that this has been expected and is very needed for longer term stability and growth. So whether or not we actually have seen a top come in to pull back and retrace the lower lows, we are going to be talking about that a little bit more in the show today. As always, if you are new to the show, huge welcome. Don't forget to hit that subscribe so you can stay updated in this crazy crypto space. And of course, as always, to everyone, don't forget to hit that like button as well. It does help the show if you do enjoy the content. So let's dive in right now. We're looking at Bitcoin at 21,850. So we are down pretty substantially over 5% right now. So on the day so far, looking at, right around 5%, just shy of that. But we do have about 2 hours to close left on the day. So I want to actually go ahead and zoom into a lot of these trend lines that we're looking at up overhead, because if you can see this big zone that's created by all of these price levels, you can just see how massive it is that actually this current daily candle has completely smashed through all of them. So essentially what we're looking at is price levels that go based off a lot of closing levels. So for example, a closing price level, we have closing price levels as well as actual price levels. So essentially the reason this is relevant is that because on this big stair step pattern where we had sideways trading for a period of a while, being able to maintain closes despite having all of these downside and lower shadows on all of these candles is extremely important and relevant, just showing the importance of having price levels like this, because anytime prices have dipped below those levels, that is when we see a lot of buying ensue, and that's what has maintained prices staying on top of those levels. So the fact that now we're seeing an extremely big bearish candle, and actually if we look at the size of this candle too, we actually haven't seen a candle of this magnitude basically since the 20th of January, so about 3 weeks ago. So you can see just during this whole time, it was a lot of minimal sideways trading, just making this overall type top pattern. And one of the things I actually want to do really quick is go ahead and invert this chart. And so you can see we're basically just flipping it upside down. So if we look at this in the reverse and opposite perspective, if we were looking this as a pullback and a bottom, you could see how this would form a very nice accumulation period and basically stabilizing along a very nice support point, but also establishing a big resistance point up overhead. Well, all of that's especially true now, except we're going to go ahead and invert it back and maintain this chart in the right direction. So now you can see big support points all the way. So the fact that now finally being able to break all of that and also have that big accumulation period confirm a resistive top, and then now see a lot more of that downside pressure that has been expected, is confirming that we have seen our trend high come in right now. But one of the other big bearish things that we have been looking at is a break of pretty much the lowest price level on this move, which has confirmed a new daily low. So in this instance, let's go ahead and zoom in on this pattern once again. You can see that we actually did find our trend, set our high, pulled back, set our low, lower high, and then now our lower low, which actually on this move correlates to a completely new lower low below 22,296. So effectively right around the 22,300 level. So from that level down to current prices, we are going to be looking at a 2% move down to the low end of the wick is going to be almost a 3%. And the other big point of support that we had been looking at as well is just this big 26 period exponential moving average, which as you can see with less than 2 hours left is likely of actually having a nice close below that level for the bears. So next level of support's actually going to come in at the previous high before this nice bullish candle set us up to the current trend high. So price level for that is going to come in right at 21650. And as you can see, current prices aren't too far away right now from hitting that level. And we actually did get our little downside wick almost down to that level as well. So on the shorter time frames, we could actually see a little bit more of an oversold bounce, but we are still going to be looking at some targets to the downside below that. So essentially more or less what we're doing here is if we look at this in a few different ways, and it's obviously not perfect, but we could even look at this as being a head and shoulders type pattern. Or the other way we could look at this as even being an inverted cup and handle pattern. In either case, essentially what we're doing is we're finding the distance between where the big support points lie and where the big resistance point up overhead is, and finding that gap, and that's essentially our technical target to the downside. So if we look at this vertical line, for example, up to the high, now down to the low, which is this blue line, which effectively does represent the lowest that the price has got before ultimately seeing a retracement. If we use this as our guide and actually move this to the downside below that, you can see how this price point effectively puts us right at this bottom support point that we saw before the big move to the upside. So if we look at a specific price point, that would be about 20,488. So that could effectively be a nice support point down to about 20,378. Now, if we actually look at resizing this bar to about where the initial and bottom closing support came in and use that as our guide, then in that instance, we're going to be looking at just above 21,000 at 21,137. So if we use that as a guide, then you can see that this bottom 50 period exponential moving average could actually end up rolling up with this level if we do see a little bit more of a cooling down for selling pressure over the next couple of days, especially if we do get a little bit more oversold bounce pressure and retesting that level. So we do still have plenty of support to the downside and still the ability to maintain a bullish trend. But we do know that this pullback has been coming and needed. But pretty much the low point for us right now is just going to be this very big bottom support level that does come in just above 20,000 at 20,378. 20,000 might seem like it is a psychological level, and it probably will be just for a split second. But previously, we've never seen 20,000 really act too much like a resistive psychological level, except for the previous all-time high back in December of 2017. So one of the things that we have talked on the channel many times before is that when we do find a very nice support and consolidation period to the upside, that does provide us an opportunity to find support on the downside. So realistically, I would love to find support in between this zone right above 20,000 and then potentially all the way up to about the mid 21,000s as well. Realistically, I think that would be a very nice opportunity to consolidate and actually have the bulls continue with the upside if that is in fact what ultimately happens. Caveat to that would be that if the bullish momentum does run out and we see an increase in bearish pressure and potentially another news-driven catalyst, which could potentially push prices down a lot lower. In the event that does happen, though, let's go ahead and switch over to the weekly chart because we actually have a lot more room to the downside on this weekly to be able to confirm a higher low, because our weekly higher low doesn't come in until the low 16,000s. And typically when we do have these moves that do come off of a very big long bear market, we do see a huge significant retracement almost down to the previous low just to be able to confirm that we are in fact setting that higher low. And especially with how much euphoria has been happening over the last few weeks, we know that that'll instantly flip and shift, and then everyone will claim that the bear market will still be in, and that's when everyone's going to get caught off guard. Obviously, no guarantees ever of that happening. That's typically just what we end up seeing and what's likely in these type of scenarios. And so while we are actually on this weekly chart, let's go ahead and zoom out and flip into the log scale, because one of the things we're looking at is still maintaining a longer picture downtrend on this weekly chart for Bitcoin that does align perfectly with how this weekly chart's set up. So if we look at the weekly closes, then you can see that we had our high back in November of 2021. We had our initial first touch of this resistance point in March of 2022, and then also now finding this as a resistance point as well. And then if we actually zoom in really quick a little bit, you can see that we are still holding resistance below this 50-period exponential moving average on this weekly chart. So now we also have a very nice support trend line to the downside, forming this longer-term falling wedge. And so now, especially after getting resistance and rejection off the top end of this trend line, this is pretty much going to be the confirmation point that we're going to be looking at. And it's not going to be uncommon, like we said, to see a pretty significant end retracement. And even realistically, I wouldn't be surprised over the next few weeks or months to actually see a retracement down to about the $18,000 level again, just to confirm that higher low and confirm backtest these previous levels of support as well as this previous level of resistance. Now, if we actually switch over to the 2-day chart here and I remove all of the mishmash on the chart here, then we can see that we're looking at a nice support point coming down on this 2-day, so far in between the 12 and 26 period exponential moving average, after we've had this nice bullish cross and continued follow through. So even the 50 period exponential on this end, which was previous resistance, would still be down at the $20,000 level right now. And obviously by the time it would get there, we would see a little bit of a higher price before that. So ultimately, I would expect that even to potentially run up to about 20,500, but then also from 21,300 down to about 20,900 as well. These are all just going to be extremely good support points on the downside, which I do expect to likely hold for a little bit anyway, unless we get a huge influx of volume. And so if we actually pull up a Fibonacci retracement level as well from the low to the current trend high, then you can see what we're looking at right now. The 38.2% retracement is going to be our next big guide. That does come in at 21,236. So as we pointed out, that's extremely significant because it does intersect almost perfectly with a lot of these previous price levels that were resistance that now should be flipping into that big, nice support level for the downside pullback. Below that, though, is the 50%, which is at 20,296. So right about that 20,300 level that we were talking at, which almost hits perfectly with this downside support. as well as will be a nice, basically a middle line between the 26 and the 50 period exponential on this retracement to the downside. So as such, because of that, because of the exponential moving averages, the price levels, as well as the Fibonacci retracements, I do anticipate 21,236 down to about 20,300 to be a very strong zone to the downside that I would anticipate seeing a lot of buying happening at. And this is pretty much going to be our confirmation zone. If we do go lower, this is going to flip back into resistance, and I do expect seeing prices down into the $18,000 level. But if we do end up seeing prices hold at this level, then that's going to increase the likelihood a lot more of bulls staying in control and actually pushing prices back to the upside and seeing a new high, rallying above this 24,300 all the way up to the $25,000 level and even beyond that. We go ahead and turn on the VPVR volume profile visible range. You can see that if we look over to the right-hand side, big point of mass is sitting below the price point right now. So prices still have all this chunk of mass to fall on top of, which does make it a lot more likelihood as well that this is going to be a very big level to maintain. So this whole big zone that we were looking at is still affected by all of this mass, and we actually have mass going all the way down to about 19,000 as well. So I think at the very worst, good shot of seeing that as a higher low for the weekly chart and still being able to maintain a little bit more of that bullish composure in that instance. But one of the things I do want to talk about now too is just the time-based volume instead of the price-based volume. So let's go ahead and turn on the regular volume here and actually look at this. If we zoom in on this chart, you can see a complete taper off in all volume, but with the pullback, we could see an increase in bearish volume now. But so most of the big volume that we saw happen was actually on this first initial move before we actually broke through up above the $21,000 level. Once we broke through 21,300, price action to the upside was actually not really that substantiated by continuously upside bullish volume. So we did see that decrease in bullish volume, and it's essentially all volume for that matter, but we hadn't seen that much selling come in. So the fact that now we could be a little wary of minimal bull volume or bear volume, at the top, turning into increasing bearish volume on this pullback, since we have extremely flipped the narrative very quickly from fear to FOMO and fear to greed, which, like we've talked about on the channel and on Twitter before, that when we see moves like this that just completely change the sentiment so quick and so fast, it's not sustainable, and that's what we worry about kickstarting that greed cycle again, or that fear cycle, that does end up leading to big price retracements and corrections to the downside. So volume here is really going to be the key, especially when we talk about this big downside zone of support that we're going to be eyeing. If the volume on these charts does start to show increasing bearish volume day over day and on the 2 days and weekdays as well, then I'm definitely not going to have as much confidence in the ability of this zone to provide that support that we're looking at. But if we do see a decrease in bearish volume, then it's almost going to be an assured thing that this will be a very nice support level that will end up holding and being able to provide that higher low. So hopefully everyone's not panicking over this move yet and are able to capitalize on the ability to buy that dip. And this is one of the other important reasons too why it's always good to know what next likelihood scenarios are, because after seeing such a huge explosive move and rally, we do know that a pullback, correction, and retracement is going to be in store. It's always just a matter of when. So hopefully by watching some of the analysis on the channel, you've been able to kind of have that scenario thought about and planned for a little bit more. And just know that pullbacks are a very normal, realistic, and healthy part of longer term growth and investing. As always though, if you do have any questions, thoughts, comments, all that stuff down, let me know in the comments sections below. I do love getting back to each and every one of you, or feel free to reach out on Twitter at @coin_trades is the handle over there. That is going to wrap it up for the show today, though. If you did enjoy, please hit the thumbs up, like, and subscribe button if you haven't done so just yet. Do appreciate all the continued love and support. As always, it does mean so much. Stay safe, take care, everyone, and I will catch you back in the next video.